Okay, good afternoon, folks. Good afternoon. Where's the camera? There it is over there. Good afternoon. Hopefully you are well. Hopefully you've all had a good weekend. Just a quick check here. I've got screen status showing me poor. Am I coming through okay? Let's have a look here. You're fine. It all looks good, is what I'm being told from the back office. Hello. Welcome to everyone. Welcome to what I think hopefully is going to be a regular event. Okay, so I'm looking to try and do this now every Monday to start the week off, kick the week off, looking for trading opportunities. First off, we'll start off by looking at what was moving the markets last week on what I saw to be the sort of pertinent things in the markets. Then we'll to talk about what's going on this week, some trading opportunities as well. We'll get onto the charts, have a look around the charts, see what's going on, see if anything's moving, any opportunities. Today I'm also going to introduce you to a very basic strategy that I think is well worthy of you doing some back testing, taking it away. We'll see if we can take some live trades as well. So each and every week we're going to do something a little bit different. I'm going to come on and give you a little bit of education at the end of like the weekly scan, whether it's drawing support and resistance lines, which I think is going to be next week, whether it's looking at different indicators and so forth. But each week we're going to be ending off with a 10-minute section of just a snippet of education. So make sure, on that note, you subscribe to the channel if you don't already do so. Make sure you hit that notification, that little bell notification that everyone talks about. That way you'll be notified when we come on, so that you don't miss a trick. Make sure that you follow us on Facebook again. I think the description links there are in the description tab below. Facebook, Telegram, and of course on Instagram as well. So we're all over social media, as you know, and it's not me doing that, I can tell you that. So make sure you follow us on all those different social media outlets, and I think you'll find it to be very, very worthwhile. As always, if you have any questions, please do drop them in. I know I got I do regular YouTube videos on the channel. I think we've got over, I don't know what it is now, 230,000 followers or something like that. This is your chance to engage with me live as well. I always try to read the comments, get back to them in due course. But this is your chance every week now to engage with me live while I'm on stream. Now, of course, we've got lots of people listening in, so I'll try not to miss any of your comments. If I do, then just keep badgering me away, and then I'll see if I can get to them for you. You can hear that. We've got the RAF doing practice runs over their head there, so apologies for the noise if you hear that coming through. Right, okay, so let's just have a quick look to see who's in the room at the moment. We got Mick Zolli's asking me for the pound against the yen. I am going to talk about the pound against the yen. That is one of the trade opportunities I think is maybe going to throw something our way this week. Pound is looking particularly weak across the board, as we know. Japanese currencies looking reasonably strong as a safe haven. Steve Savage is asking me for the euro dollar. Euro dollar's great. We've got an open trade going on in the euro dollar. Us here at Forex Signals, we take it. It's one of the strategies we talk about. It's called the naked strategy. We've got an open trade. It's about 200 pips up at the moment, only from about 4 days ago, so it's doing quite well. We'll have a look at that for you, Steve, against the euro dollar. Hello, Master Andrew says, Josel and Naeem Ahmed, I'm stuck with a buy on pound Aussie. I don't know if I'll be buying the pound Aussie. In fact, we do a weekly market report, and the pound Aussie did feature this week. It went out a few hours ago. Unfortunately, it's not a buy though, Naeem, but there you go. At least you know it's live anyway, you're not recorded. So there you are. Right, let's have a quick look at what is going on. I'm just going to switch over cameras, and that camera looks as though it might need... looks as though that camera's... I'm not going to be working, so I'm going to be doing it from this area, which is just as good, unless I can pull this out and see if it comes back in. Let's have a look here. Let's have a look. Does it come back in? No, I tell you what I can do. Just bear with me a second. Some of these cameras are... I've got different camera setups all over the office here, and sometimes they work, sometimes they don't. That's one of the nuances of the OBS. Okay, that's fine. You can watch me from this angle here. So let's have a quick look at what was driving the markets last week. So last week, you'll see here we had, well, it's quite a busy week. We had the RBNZ. Now that's the RBNZ. That's the Central Bank of New Zealand. They were talking pretty vocal about moving their interest rates into negative territory. If interest rates move into negative territory, and that's normally not very good for the particular currency. One of the reasons why we look at all these economic indicators throughout the trading week is because it gives us a clue on where the central bank will be moving their interest rates, and of course negative rates would not be good for the currency. So the New Zealand dollar is pretty reactive to that at the moment. The New Zealand dollar is still holding up quite strong, but we keep an eye on that as well last week, and I think they were talking about it late last night as well. Last week we also had quite a lot of Eurozone Pmi data. A bit of education here for you. Pmi data is a really strong sort of economic read that we see once every so often throughout the calendar month. It stands for Purchasing Managers Index. It's basically like a forward-looking survey of all the business leaders and the market market leaders, different sectors, the manufacturing, services, and so forth. Basically asking them for their opinion or their views on where they see the economy going. It's like a sentiment indicator. And of course, if the business leaders are getting optimistic about the future, then that's good for an economy, and it's positive for interest rates and positive, of course, for the currency as well. PMI data out of the Eurozone last week was particularly strong across the board. So we're seeing anything above 50 is deemed to be an economy that's expanding. I think below 50 is an economy that's contracting. But the reads last week in the Eurozone were quite good. And the Euro has been on a very, very strong footing over the last few weeks. If you've been following that. In fact, 8 of the last 9 weeks, if I'm not mistaken, has shown a positive euro over the US dollar. So the euro has been on a tear to the upside. We saw towards the end of last week maybe a bit of a reversal in that, and something that we'll be watching this week as well. Today, of course, is Labour Day in the US, so not expecting too much happening today. Then we had on Friday, we had the US non-farm payroll. Non-farm payroll, we stream it live as well. We give away $1,500 in cold hard cash every month as well. Give away 3 different prizes. We had 3 lucky winners on Friday as well, $500 a pop. You can tune in for that if you wish. If you want to subscribe to the channel, you can always take part in the next month's non-farm payroll. Give you a chance to win $500. It's free to enter. You don't have to pay to enter. It's absolutely free. Non-farm payroll came out on Friday. It was slightly better than expected. There are signs in the US now, post-COVID, that the economy may be looking to turn back. We had some positive retail sales. That's how much people are spending. Job numbers, unemployment now dipping below 10%. Sounds odd saying that, dipping below 10%. Before all this kicked off, of course, unemployment was around 3%, went up to 22%, I think it was. Or it went up to 19%. Estimates were going to 22, but it got to 19%, and now looks as though the US are getting back to work, and again, that's good for it's good for the economy, and it's good for the dollar. Maybe why we're seeing the dollar turn back on itself. So non-farm payroll was pretty strong out of the US last week. But also keep an eye on the stocks. Stocks are at pretty much a record high. S&P 500, that's the top 500 companies, excluding Tesla. That was basically not allowed in today, I think if you saw that. And the Nasdaq, which are the tech stocks, all on all-time highs. The Dow, that's the Dow top 30, pretty much near all-time highs. But last week, stocks took a bit of an end-of-week tumble. Risk off. You often, if you see me in the trading room here at Forex Signals, I'm always talking about risk on and risk off. Is money flowing into the riskier assets? Are we seeing money flowing out of the risk? At the moment, over the last, pretty much since March, when we had that big tumble and stocks dropped 30% or 35%, we've seen a recovery in the stock market. The stock markets have been on risk on mode. Last week we moved into risk off. Why is that important? It's very important. This risk on, risk off mood, tone has an effect on the currency markets as well. So that's why I'm always looking to see where the big monies are flowing. Is it in risk assets or is it moving off? If it's moving into risk, money's going in, you normally see the low yielding currencies like the Japanese yen, the Swiss franc, even the euro. These tend to underperform when risk on because they are funding currencies. Investment banks, they borrow. They borrow the cheapest currency to borrow, and then they sell it on the financial market, in their forex market, to buy the currency that they want to invest in the country. So basically, it's a funding currency. So we're always looking at risk on, risk off. You'll see on my screen at the moment, on my little ticker at the moment, you see the markets are in risk off tone. So the markets are seeing a pullback in the stocks. Very important. So US Labour Day today, Monday. This is what we've got planned for this week. US Labour Day. So markets are pretty subdued today. That's normally the case when the US goes on holiday. We are waiting later on in the week for the BOC. That's the Bank of Canada. They decide on their interest rates. And they decide on if they're going to move interest rates or not. Unlikely this month they will move interest rates. Clearly, if they were to move interest rates to the downside, then that would be negative for the currency. But it's unlikely they'll be moving. But with these central bank decisions, it's not just the decision itself that's important. It's often the case, that you look for the sort of the forward guidance after that. Look for the, to see what the central bank's sort of economic outlook is, what their view is on inflation and market and monetary stimulus. So that's why we pay particular attention to that. That's on Wednesday, I think. Yep, that's Wednesday. On Thursday, we have the ECB. That's the European Central Bank. That's when they decide on interest rates as well. Unlikely that they'll be moving interest rates, but the markets will be watching them. COVID kicking off big time in the Eurozone at the moment. Spain hardly struggling to keep on top of it. And I think that is going to be basically something that the ECB will be sort of homing in on with potentially dovish comments about the euro and about the outlook and so forth. Remember, if this is the case, if my prediction there is the case, then the euro will come under pressure this week, as it already is beginning to see cracks in. So looking at potentially selling the euro this week into the ECB on Thursday. And again, as I say here, watch the stock market. It is crucial to see what's going on at the moment. The stock markets have had a bit of a pullback. I did see that the European stock market, in fact, just coming out on Bloomberg at the moment, unemployment from 10.2 to 8.4%. You can see it. Can you see it behind me there? It is all talking about unemployment dropping to 8.4% in the US. The unemployment rate is still dropping, but yeah, we need to keep an eye on the stocks. I did see on Bloomberg earlier that the European stock markets look as though they're showing a bit of a bid this morning. Right, let's have a quick look at what is going on in the markets to see where we are. Let's just putting up a quick scan of the charts and we'll see where we go. As I said a moment ago, we do have a trade set up at the moment. This is a trade we took on Thursday, I think it was. Thursday, we sold the British pound against the US dollar, and we sold that on the higher time frame charts. It's what we call a naked trade setup. A naked trade setup has basically a simple price action looking for reversals. We're looking for this type of formation at levels of support and resistance. It's one of the strategies I teach inside the training room. We took this on, I think it was Thursday. Well, I can tell you when it was because it was, let me just give you a little glimpse into when that went out. If I take that little tab there, you can see this one went out on, where was it there? That one went out 5 days ago. Here we go. You can see the comments in here from the members in the room. TP1 has been hit, going well. TP1 closed, TP1 done. So TP1 is done on here, but we're still looking for continuation of the pound lower against the US dollar. So we're still quite liking that one here at the moment. Our TP2 is set down there at 130.50. Of course, if you want to learn more about this strategy, you can come over to the trading room and learn all about it. I think we've got a 7-day free trial as well. If you want to come over to the room, we stream live around the clock throughout the trading day, 5 or 6 times a day. We're doing streams like this, looking for real-time trades. Someone asked me a moment ago to look at the at the euro against the dollar. Now this is another interesting one. Okay, back to the daily chart here. Okay, you see again, I've got it highlighted in yellow. There's another bearish pin bar at this level of resistance on the euro against the dollar. So this gave us, this isn't guesswork, this is just basically the strategy rules that we employ. And this one gave us a short entry. It's been up about 1,200 pips. I'm not in this one because I took just the one in the pound against the dollar. But the euro dollar one was an equally interesting one. As I say, we're in just one of them at the moment. I took pound really because of the weakness that we were seeing in the pound across the board, and that's basically where it is. While I'm on this naked setup, guys, I talk about this naked setup all the time to our members inside the room. I want to just show you what is potentially going on in the stock market. Okay, this is the S&P. Sorry, this is the Dow. Okay, this is the Dow Jones Industrial. It is let's say the top 30 companies. Here you'll see the daily chart. We put in this pattern here. This is known as a bearish engulf. I'm going to talk a bit more about that in a moment. But this is giving you a bit of an early warning sign that these stocks could be in line for a bit more of a tumble. When you see this type of pattern at these levels of resistance, it is pretty bearish, meaning that we could see a pullback on there. If you look here on the weekly chart, this is the weekly. Okay, we've got a big bearish engulfer on the weekly, just ahead of the weekly, well, the all-time high at 9. What was the all-time high? It came in at 29,570. Got up to 29,212, and then it's fallen off. Folks, if this stock market pulls back over the next few, few trading sessions and takes out Friday's candle to the downside, you can pretty safely say that the stocks are going to be under pressure in the run-up to the presidential elections. Okay. One thing I want to show you while I'm on the charts here, before I get on to this little strategy that I want to talk to you about, is basically this. Everything that I do in the currency markets, and I know you've seen me a lot on the live, on the videos we put out, but not many of you see me trade live every day, which we do live every day in the trading room. This is one of the tools that I use pretty much without fail. This basically is my, well, they say there's no such thing as a holy grail in trading, and there is no such thing as a holy grail in trading. However, if there were such thing as a holy grail, then this would be it. Here you can see the pound is the white line, which is showing that the market is moving to the downside. Okay, so we're moving down here. This, as you can see, it moving with my mouse. Okay, and this shows you the selling coming in. What I've done here, basically, so you know how it works. It's not magic. I mean, it's just a very simple calculation that I had traded many years ago. This is basically a horizontal moving average. It's a 20 moving average, and this shows you the deviation from the moving average. Anything below the line, without getting too complicated, is a currency that's been sold. Anything above the line is a currency that's being bought. And you look at the direction of these lines. Look at this brown line here, the Japanese yen. Yeah, this shows you the best currency pair to be trading at the moment on a longer time frame, on the 4-hour time frame or the 1-hour time frame, is the pound against the Japanese yen. Someone asked me about that earlier. This is a very strong pair to the downside, pound against the Japanese yen. This is why I use this. It tells me where the money flows are. Remember, I mentioned to you about the New Zealand dollar. Look at the New Zealand dollar. Moment, it's pretty much up there on the 4-hour chart. This is poised for a fall, the New Zealand dollar. Waiting for it to fall. When it starts pulling back down on itself, that's when I'll start looking to short the New Zealand dollar. At the moment, it is the pound, the weakest currency, and these currencies here are the stronger ones. This is the green line, one worth looking at. This is the US dollar. Yep, this green line. This is showing you that the US dollar currently is a strong currency, which you can see there on the dollar index. Dollar index now making a nice bid to the upside. Okay. So there you are. So we're looking at just have a look at the pound against the yen. It's one of the trades that I like for this week. So you've come in here looking for a potential trading opportunity. The pound yen is a currency pair that I think you ain't going to do much damage by taking a short. This level of support in here, it comes in as a previous level of resistance. Often you'll see level of resistance act as support. We've broken through this level of support. It was on a 4-hour chart. It bounced off it 4, 5, 6 times on the way down. We've come back through now up to retest, continuation to the downside. It has momentum with you. It's got the weak pound, it's got the strong yen. We've broken through key structural support. When you see something like this, the risks or the edge is clearly to the downside. And when you're trading, guys, all we're trying to do, there's no one out there that can tell you the holy grail magic strategy. All we're trying to do in trading is to have the slightest of edge and keep exploiting that edge over and over again. And this here, if it's a 50-50 bet, well, 50-50. This has got to be, in my opinion, better than a 50-50 bet. The slightest edge, broken through support, trend's your friend, pound's weak, yen's strong. I'm looking to take shorts in that. Also looking at the euro again this week. The euro looking potential short. We've just taken out this level of support in here on the 4-hour chart. Okay, this is a level of 125.50. If we break and close, well, if we stay, we have broken it to the downside. If we close anywhere down here tonight, over the next couple of sessions, the bias is going to be for continuation for this currency pair to the downside. Remember, it's all about getting that edge. This is on the higher time frame stuff. But one thing I want to talk to you today about in today's little education snippet is basically a very simple trading strategy. Okay, a very simple trading strategy. Let me just see if I can put this camera back on. He's not coming up, no worries. So a very simple trading strategy basically relies on, look, one of the biggest reasons why most people fail in trading is because they overcomplicate it. They're looking for that magic strategy, or they don't have a strategy in the first place. So today I want to introduce you to a very simple trend following strategy. Okay, as you know, with trends, you've heard the expression, you've heard my expression, the trend's your friend to the bend at the end. Yeah? Trends very rarely move up in a straight line without pulling back along the way. Very rarely would you see, or in fact I would say never would you see a trend continue like that. They're always having pullbacks. We are, as trend followers, we want to get into this trend, but we never know for sure whether this pullback that we're seeing is indeed a pullback or whether it is going to be a complete reversal, in which case it's going to come all the way back down and you're going to get stopped out. So what I like to do is use very simple price action patterns to help me determine whether this is more likely to be a pullback rather than a reversal. And this is the type of price action patterns that we look for. This is basically a, bear with me, just there we go. So this is basically a classic bullish engulfing pattern. So normal regular candlestick chart, you know what's going on the candlestick chart. It's basically showing you pretty much what is happening to price in terms of human behavior. Here you'll see with the this pattern, with this red candle here, markets clearly open here and they close lower. Why do we know? How do we know that it closes lower? Because it's a red candle. Okay, if it was a blue candle like here, we open here, we hit a low down here, we hit a high up here, okay, and we have a close here. This is a blue candle, which basically tells us that we opened lower than where we closed, or we closed higher than where we opened. It's a bullish pattern. So what's happening here with price is clearly the sellers are in control. They're moving price down. This is human behavior, moving price down. It closes lower. And what happens in the next candle is it fully engulfs. The buyers come in and start overpowering those sellers to fully engulf the previous candle. That shows you that now the buyers have taken control and outweighing, or beating if you like, the sellers that initially drove it down. Okay, so for example, if you're seeing a trend moving like this, and then you have this bit of movement here, this is say the hard right of the chart, and you see this red candle coming in here. Okay, is it a pullback? Is it a reversal? We don't know at that time. Then you see this bullish engulfer coming in immediately after that pullback candle. This is a good indication. An edge. That's all we're looking for, guys. A simple edge. It's an edge that tells us we're going to potentially continue on in the direction of the trend. This is a bullish engulfing pattern. Just taking a quick look at the chat there. So that's the bullish engulfing pattern. So we're looking for these in the direction of the trend. Same thing, but in reverse on the on a bearish engulfing pattern. So this is a bearish engulfing pattern. Here you've got a downtrend. Yep, markets are moving in downtrend. We're trend followers. We want to get in on this trend, but we don't know if the trend is going to continue. You know, we don't want to be selling at the bottom of downtrends. We don't want to be buying at the tops of uptrends. We want to wait for the pullback, because that's what happens to markets. You don't want to be selling at the bottom. Chances are you're going to get stopped out quicker than you know. So here we've got a bullish candle coming in. This is the blue candle. Yeah, it's a blue candle. It is a bullish bit of price action. We've opened here and we've closed above. That is a bullish candle. And then the following candle is a red candle, comes in, completely engulfs the previous bullish candle. That confirms that this is likely to be a continuation. So we're looking for these patterns with the predominant trend. Very simple strategy. All these technical indicators, we will talk about them in subsequent lessons, subsequent weekly videos or weekly live streams. But you know, the power is in pure price, and this, you can't get more powerful than this. This is showing you exactly what's happening real time. These are not lagging indicators. This is telling you what's happening at the moment. This is a bearish. You see these in downtrends, high probability that trend will continue, or stronger probability. Remember, you need a slight edge. Look at the roulette table, the roulette wheel. Yeah, it's got red and black. It pays out 36 to 1, and it's the most successful table in the casino for the casino owners. Why? Because it's got that little green zero at the top. The little green zero that basically gives that the edge. So and that's what we need: a slight edge, and exploiting the edge over and over again. Another pattern we look for is going to be one of these patterns. These are called pin bars. Shows you what's happening to price. Yeah. Here you see in price. Think about what's happening to human behavior. Think about what's happening to form that candle. Okay. Where you put your stop loss. So we're going to come to that in a moment when we get onto the charts in a moment. When I'm going to start trading this. We've got 15 minutes to do this, so we're going to have to see if we can make a few bucks. So this at the moment, you've got a bullish pin bar. Markets are trending up. Yeah. Then the sellers come in control. Yeah. Push the candle price right down, but then we close higher than that low. Okay. So you've got the bullish pin. Doesn't matter what color it is. It just shows you that the sellers that took this down have been overpowered by the buyers that took it up, and we close higher than the low of the pin. Bullish pin. Yeah. Same as a reversal candle. Oops, daisy. Same as a reversal candle. So this is the bearish pin. Yeah. Markets are trading down. Yeah. Buyers come in control. Takes the price up, creates a new high, and then the sellers come back down and confirm that this is indeed wanting to continue. Okay, so that is an indication that the trend is going to continue. We use this in conjunction of other stuff as well. So this strategy I wanted to introduce you today, we're going to trade it now live. Okay, and I'm going to be doing this on a very low time time frame. We're going to do this on the we'll do it on the 5 minute and indeed on the 15 minute. So what I need now is this pattern finder to come up. It's going to show you, it's going to do all the work for me basically. Rather than me have to go through the 28 different currency pairs, this is going to basically do the scanning for me. So I'm looking here for the engulfing pattern, so I'm going to tick here the engulfing pattern. By the way, any of these tools you see me talk about now, if you want to go and try them out, they are free. You can just come over to the trading room, check them out, absolutely free. You can stay for 7 days, won't cost you a dime. You can check all this out. And indeed, when I finish this live event in a moment, you can go off and practice this strategy by scanning on your own. Or of course, you can use the pattern finder. So what I'm going to do, I'm going to use the engulfing pins. I'm going to go for the 15 minute, and I'm going to go for the 5 minute, and I'm going to activate the scan. Okay, and it's going to look for particular price patterns for me. So nothing showing at the moment. This will be coming up in about 10 seconds. You can see the clock there on the wall. We're going to see potentially a new scan go on, because it happens every 5 minutes, because I've tucked the 5 minute candle to see everything comes up. Okay, no patterns showing there at the moment, but what I'll be looking for is a bullish engulfer, bearish engulfer, bullish pin, bearish pin with the trend. If I put it in the 1 minute, you'll see this is. I'm just doing this for an example of what it would look like. I'm not going to be trading on the 1 minute chart, but it will basically scan the patterns for you. It's found this one here. If I click on view, this is the Euro Yen 1 minute pin. Euro Yen we think is a sell, by the way. So Euro Yen, click on the view. It's going to pull up the. You'll see here it's got a little red arrow. It's telling me that there is a bearish pin. Okay, I mean it's not really in a downtrend, so we're not going to be taking this one. I'm going to look at that. Well, this is the higher time frame chart. My anchor chart here is the 1 hour chart, and I put in these array of moving averages in here. They're simply an array of moving averages. They're called a guppy array of moving averages. If you wanted to search them out, I didn't invent these. It's just an array of moving averages. If the pink are below the blue, then I'm a seller. If the blue pink are above the blue, I'm a buyer. It's got to be, we don't want to see, crisscrossing of the moving averages. We want to make sure that these are basically nicely fanned out for the downtrend. So yes, this is a downtrend. This is the hour time frame chart. We've got nicely fanned out moving averages. Had that been a bearish pin into the array of moving averages, then we would have taken that short. Remember, this is the 1 hour, 1 minute chart. I'm not trading the 1 minute. My stop is going to be above the red line, which is a 60 moving average, or 2 ATRs. Okay, 2 ATR. ATR basically stands for the average true range. Do watch my upcoming live events. I'm going to talk about average true range on other education events as well. So one of the only real indicators that I like to use on a regular basis. So you can check that out. But we're not taking that one at the moment. We'll see in about 3 minutes time to see if any more patterns come up. But this is doing nothing on the 1 minute. But look on the 5 minute chart. Well, you've got a bearish pattern there on the 5 minute chart, with the confirmation of the higher time frame down as well. Well, the other thing I want to point out here, when you are trading, it doesn't matter whether you follow me. It doesn't matter. Quite frankly, I will say this quite bluntly: if you're not managing risk with your trades, chances are you're not really trading, you're gambling. And it's that sort of mentality that kills most traders, the gambling mentality. So you should be considering risk on each and every trade. We've sort of got this tool here. You can come and use it. You can get them elsewhere. You can buy them elsewhere. I would say you should make sure you've got one of these somewhere. Oh, we just had a signal go off. Let's have a quick look to see what that one was. That was in... Let's have a look here what that one was. Okay, that's a 1 minute engulfer. No. So this is a risk management tool that you can use to control your risk. I preset my risk tolerance here to 0.5% of the account. Okay, so I'm never going to risk more than 0.5% of the account on this. 0.5% on a 5 minute chart is most probably a little bit too rich, really. But for the sake of this live event, we'll stick it to there. But 0.5% risk. Okay, I can turn my risk management tool on. Up will come with the trading lines, and basically I will be able to see where the there we go. Turn on the risk management tool. So the green line is my profit target. The red line is my stop. Okay, and what I'm doing here, I'm just moving these lines of entry. And as I'm doing this, look at my stop. If I'm moving my stop down, you'll see the risk-reward ratio is increasing. If I move the stop up, you'll see the risk-reward ratio. Look at that number in the middle there. The risk-reward ratio is decreasing. I think, personally, you should always have at least 1-to-1 risk-reward ratio. This is going to work out the lot size for me based on the stop loss. And, of course, you can also set it to pending orders, by the way. Switch pending order, so I can have a sort of a level where I might want the market to move into. Stops above, price action down again, and if I was to place that pending sell order, that goes straight into the market. And now I'm going to pull it down because it's a real account. But that market is now that order has now been sent to the market. Let me delete it first before I get filled. Wouldn't mind getting filled on that, to be honest, but it doesn't conform exactly with the strategy, so I'm not going to take it just for the sake of it. You need to make sure that your strategy rules apply. You don't just take trades willy-nilly. So you look for support and resistance for your profit targets. You want to get at least 1-to-1 risk reward ratio. The stop should be around the 60 moving average or 2 ATRs, whichever one is greater, and position size accordingly. As I say, you can have 2 profit targets as well. This will send basically the order to the exchange in 2 tranches, so that you can manage the trade after TP1 is hit, should you wish to. I seriously recommend you get one of these, even if you don't use IELTS, even if you never come into the Forex Signals trading room. Not a problem, doesn't bother me. But I suggest you do go and find one of these somewhere and make sure you consider risk on each trade that you do. Can you shift the chart move? Yeah, I can shift the chart, or I can just move off the. There you go. That's quite good point. Yeah, your screen is in the way of the chart. There you go. So you got the bearish pin there at well, it's a flat range. So there you go. So nothing is going on there at the moment. Okay, so we're just sitting here at the moment, not seeing any 5 minutes coming up. We've got. I'll wait for the next 5-minute candle to appear. Let's look at this euro pound on the 1 minute pin. Euro pound. It's a blue pin bar, so that's a bullish trade. Yep. But the trend is down. Yeah, look at the higher time frame. The trend is up on the higher time frame. It's a 1 minute chart. Well, I don't trade the 1 minutes, but there's your bullish pattern. It'll be a few pips up if you took that, but it'd have been a 5 minute. I'd have had a look at it. Certainly, nice found out moving averages on the higher time frame, which in this case is the 1 hour time frame. Nicely, no crisscrossing. Remember, we don't want all this crisscrossing with the moving averages. It's got to be nicely fanned out. What we got there? Let's have a look. That's going to be another minute candle again because it's not up to the minute. Minute Aussie Swiss. Bullish candle, higher time frame. Yeah, you can tell by the charts here. I am short the Aussie Swiss at the moment, but it's been nicely on side. It's just gone into 15 pips offside at the moment. Aussie Swiss 1 minute pin. Yeah, nothing going on there. We got 3 minutes, folks. 3 minutes for the. Oops, a daisy. There's my balls. 3 minutes for the next candle to change, and let me just scroll then to the left so you can see the far left of the chart. You can move these around the screen as well, folks. So next week I'm going to be talking to you about. I get asked this question all the time about drawing support and resistance. It's one of the hardest sort of skills to master. If if you don't know what you're doing. But I've got a really cool way that I think you should be focusing on when drawing support and resistance, to take all the guesswork away from it. A lot of people, I've seen charts in the past where support and resistance lines are in. There's so many support and resistance lines that price can't do anything. But I've got a little treat that I want to talk to you next week about in terms of drawing support and resistance. So make sure you come back next week and we'll go through that after we go through some charts. Hopefully there'll be more opportunities. Today, as I say, it's Labor Day in the US, so we're not really seeing too many opportunities out there. Let's have a look at the chat, shall we? Kill some time here. Izzy N, please, how do we get the currency meter? Yeah, all these are my tools, Izzy N. I don't sell them, unfortunately. I'm not in the business of selling tools. You can get them for free if you come over to the trading room. Obviously, there's a membership fee for that, but you can check it out for 7 days and join our community. Literally, we've got, I'll give you a little glimpse into what's going on there at the moment. We've got, this is our trading room going on at the moment. There's a chat going through there at the moment, as you can see. Yeah, lots of chat going through. We've got 385 people sitting there in the room at the moment, all chatting about market opportunities. We've got trade signals in there as well. Lots of tools in there as well. But I don't sell the tools. You can get them for free if indeed you come over to the room and see what you think. Same with the pattern finder. There we go. Right, we've got a 5 minute pin. Dollar yen, 5 minute pin. Let's have a look. 5-minute pin, bearish pin. It's a bearish pin, and oh guys, it's not going to be a trending market today. Yeah, look at the moving averages here on the higher time frame. You know, you can just zoom in. They're all crisscrossing. You know, that is an environment that we keep out of. Yeah, we want to be nicely fanned out in a particular direction. Unfortunately, that is not going to work. This is the type of thing you want to see, folks. Yeah, you want to see this on the higher time frame 1 hour chart. Yeah, and you see this, and you get your signals on the 5-minute, on the 15, and that's when you can safely take that. Well, safely, that's when you take a calculated trade on those. But unfortunately, the dollar yen, because of, I don't know, Labor Day, US are closed. There ain't very much going on, and you don't want to be trading trend in this type of 5-minute chop because you get killed. Paul Whitehouse, Gabby FX. I think it's called the pattern finder. Yeah, I call this the pattern finder. Yeah. Simon Huxman's asked a very basic question. Okay, Simon, ask me away. Ask away. What indicators are best for confirming a trend? Ty Stez says. For me, I can see trend on a chart, but for me, I use moving averages. Okay, the lagging indicators. I know they're lagging indicators, but I'm not selling on the back of a lagging indicator. I'm buying or selling on the back of price action, but I'm using the moving averages to determine the trend for me. Typically in my intraday stuff, I use just a very slow, well not very slow, I use a slow, medium and fast moving average. And it doesn't matter if it's EMA or it's SMA. The way I use moving averages to determine the trend, it doesn't really matter. EMA basically pays more attention to the most recent data. Simon Hatch, do you pay tax on profits gained from day trade? I'm not a tax consultant. You do pay tax. It's part of my income. My global income is my trading. Obviously, I've got other incomes. I do tax returns of which trading, forex trading, other trading as well, stock trading. Profit and losses are all factored into my personal tax return. But of course, I'm not a tax advisor. I'm not qualified to talk to you about tax. So please consult your own tax advisor. But I will say, I think if you do spread betting in the UK, it's tax free, but that's only if it's not your main source of income. But again, speak to a tax advisor. Don't rely on me on that one. You need to get proper professional advice on that. So I don't use TradingView. No, my colleague uses TradingView. Max uses TradingView. He loves it. A lot of members in our room use TradingView. I don't really like. TradingView is a much more professional package than MT4. MT4 does what it does, and if you can't make money using an MT4 platform, you ain't going to make money just by using. You're not going to make money just by using a superior platform. So that really won't make any difference. So there you are. That was my daughter wanted me to pick her up from the bus stop. There you go. Do many rely on indicators and patterns, or do you pay attention to price action as well? Gabby FX. It's all about price action. All price action. Those price patterns I talked to you about, those engulfing patterns, pin bars, that's price action. Price action. Those levels at support and resistance, massive levels. Those levels at pullbacks, very, very strong probability levels. You don't need all the complicated strategies. You don't need to spend thousands of dollars on a strategy that gives you it doesn't exist, guys. It doesn't exist. All everyone that comes on thinks they pay $2,500. They get a magic strategy from educators. If there were such a thing, there'd be no national debt of Venezuela. I'm sure you've heard me say that in the past. You can use a multiple combination of indicators to find the signals. Yeah, you can do that. I have seen charts look something like that in the past. Messy charts. It's not loading up, but the more indicators you put on your chart, I would say the less likely you are to make money, personally. You always see something that you want to see. So there you are. Right, folks, I think we're going to leave that there. That's 45 minutes. I want to keep these down to 45 minutes. We have no trades today, unfortunately. We will be doing this again every week. So make sure you come back and We'll see if we can take some trades, but there's nothing showing today. Hopefully by next week we're going to have a bit more activity going on in the markets. All right, folks. Well, look, thanks for tuning in. You're going to sign up. Well, you don't have to pay. You don't have to, come and see what you think of it. By the way, if you do come over to the trading room and you want to speak to me, obviously we've got lots of watching this. But if you do want to come over to the trading room, let me know you've come in from the YouTube channel. Say hello. I'll roll out the old red carpet for you. I know I've got lots of followers out there. If you are one of my subscribers, of the 230,000 subscribers, thank you for subscribing. If you're not a subscriber already, make sure you subscribe. And if you haven't hit that notification, make sure you do. That way you'll know when I'm coming on live. As I say, we're going to try and do this as regularly as once a week, so I can engage with all my ever-growing number of followers, which is all free to attend as well. So there you are. There you are. You couldn't find brokers we trust. So Forex Signals TV, someone's helping me out there. Thanks. I think it's Kim helping me out there. Back office. Thank you for that. Just a quick scan of the questions. Anything I've missed? Can someone tell me the name of the EA? Yes, Pattern Finder. We've done that one. Your screen's off the charts. Yeah, sorry about that. There we go. We'll have the camera sorted out for next week, so that you won't be having to watch my ugly back of my head next week. The cameras, well, they were working earlier, but OBS operating system sometimes has a mind of its own. Thanks, guys, for tuning in. I really appreciated your company this week. Have a good trading week. Come and join me in the trading room if you want. If not a problem. I'll see you next week, same time, for another live event. See if we can make a few pips. Keep an eye on the stock market this week. Look at potentially a weaker euro into ECB. Looks as though that might be on the cards, with a stronger dollar propping up the dollar index, of course. Also, keep an eye on the British pound. Brexit talks begin again tomorrow. Brexit looks like we are going to have more heated debate with no outcome. The pound is being affected by Brexit. Keep an eye on Brexit this week. Keep an eye on the pound. It's got the bias to trade out. Thanks for tuning in, guys. I'll see you next week.